Since these instruments typically have to be fair valued because they're in trading books, it means that I think they have been marked down progressively as the global economy has deteriorated. And my hope is that most large financial institutions are now marking these toxic assets at reasonable levels, although I think much more transparency in their valuations would be desirable. And hopefully that has been achieved, at least to some extent, as a byproduct of the recent US stress testing exercise and similar exercises that are being undertaken in other countries. Second, there are the counterparty risks in the whole loan books, in the accrual, the banking books of global banks. And of course, these assets are on accrual, so a deterioration in the obligor's loan servicing capacity comes through provisioning and impairments. And the accounting and management of these tend, particularly by comparison to the fair valued instruments, tend not to be very forward-looking for reasons related to accounting principles and tax laws. Now, with the global economy continuing to weaken, here I go back to what I said at the beginning, the impairments to loans for autos and consumer credit, and I think particularly commercial real estate, will likely be the next shoe to drop in terms of counterparty credit risk. So clearly high vigilance is needed in monitoring these loans. And I would say that that is true also here in China, where the rapid growth of credit that the authorities are encouraging to address the recession is the right policy measure at this time, but it mustn't be allowed to go to excess and create a new problem of non-performing loans. If regulators and market participants strengthen their management of counterparty risk in the near term, I think these enhancements will also serve well in the longer term. But what can we begin to do now to reform the architecture of regulation so that it can deal more effectively with system-wide risks over the longer term? Let me outline 4 key steps that I think are necessary in establishing a framework for stabilizing and reforming the global financial system. Step 1, regulatory guidelines should be revised to require greater transparency and disclosure of the valuations of financial instruments, not just on the books of the most systemically important institutions, but all institutions, so that we have better measures of firms' financial performance, and we can thereby strengthen market discipline on the system. Now, this area is, of course, quite technical, but as I said, I think the US stress tests have helped to increase the consistency and transparency of valuations across the institutions that were involved in that exercise. So so the next, I think, key recommendation that needs to be taken up is that we need to move, all countries need to move, to a single, universally accepted set of high-quality accounting standards, including internationally consistent accounting guidance and auditing standards. And though China's financial system is less affected by the crisis than most others, I think increased transparency will be crucial here too, because banks are the chief source of financing for regional government and for private sector investment in productive capital here in China, and credit continues to grow rapidly. So transparency to allow all market participants to have better ways of seeing and monitoring credit flows, loan quality, loan servicing performance will be essential to limiting financial system-wide risks in the future. Step 2, and this is needed in advanced and emerging market economies alike, is to ensure that over time banks build up much stronger shock absorbers of high quality capital and liquidity to support their operations. Step 3 is that each financial jurisdiction needs to establish an agency with the authority to act as financial system risk regulator, the macro-prudential regulator. This is not going to be easy to do. Let me mention what I think are the responsibilities of this agency. I think they need to essentially be four. First, to identify systemically important institutions, markets, and infrastructures in its jurisdiction. Second, to subject each of these institutions or entities to the level of regulation that's appropriate given the systemic risks that it poses. Third, to then monitor evolving system-wide risks and require systemically important entities to take remedial measures, and that may be increasing capital buffers and liquidity, strengthening liquidity as systemic risk rises in the upswing of the credit cycle and running it down as the system comes under stress. Obviously a difficult thing to do, but obviously important in maintaining financial stability. And fourth, I think it's very important to establish a special intervention and resolution regime for systemically important financial institutions to protect the financial system without creating a situation in which some institutions are too big or too interconnected to fail. Step 4, perhaps the most important of all, is to ensure that financial regulation is, to the highest degree that's feasible, harmonized internationally. An integrated financial system, an integrated global financial system demands internationally consistent regulation and harmonized supervision. Otherwise, as we've seen, the inconsistencies and gaps in regulation can aggravate competitive pressures and create both the incentives and the capacity for regulatory arbitrage. Let me then conclude. Managing the ongoing financial turbulence and simultaneously laying the foundation for building a new global architecture of financial regulation requires a comprehensive set of measures. But I would stress two elements. First, we need to begin implementing these measures immediately. Second, it's going to be essential to ensure that their design and implementation are as well coordinated internationally as possible. And as we're here in Beijing, I can't resist just emphasizing that China will play an important role in this process, both because it is such a large contributor to the global economy, and because a number of the policy measures that the Chinese authorities are implementing will be complementary to those that are needed to be taken in the global economy to get us through these current difficulties. Thank you very much.